Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning, everybody. Welcome to the morning brief. Today is Wednesday, January 18th. It does not feel like a Wednesday, but here we are. We had some 830 numbers that were very interesting. Core PPI was, as expected, 0.1%. Core retail sales were less than expected at minus 1.1 versus minus 0.5, so pretty big miss there. PPI month over month was less than expected, 0.5% versus 0.1% minus, and retail sales were lower than expected at minus 1.1 versus minus 0.8%. Now, the market initially went up, then went down, and now is about flat compared to what it was prior. This is interesting because this is December sales, and I think a lot of people just were tired of the inflation and said, "Hey, I'm going to cut back, not spend as much." So there may be some pushback against the inflation here that's taking place. Kind of interesting. Rest of the day, we have some other numbers, but they're all yellow numbers. Capacity utilization at 9:15, business inventories and the housing market index at 10 a.m., beige book at 2 p.m. I like the beige book. I think it gives us a lot of information of the underlying economy, so I'll be watching that at 2 o'clock, but it's not a market mover. The yellow ones are low-risk market-moving things. So we've already gotten through the big red stuff for today. Remember, all trading involves risk. Taking a look at some charts, we've got the daily here looking crazy. It looked like we were going to turn over and maybe come back down. Now, not so much. Now it looks like, this actually looks like the beginnings of a bull flag versus the bear flag. But again, looking for higher highs hasn't happened yet, so we'll have to wait and see what's going on there. Really, it does look toppy here, but it is going sideways, and sideways in most cases is a good thing. Taking a look at the inventory momentum, whatever you want to call it here. We've talked about the divergence over the last few days. Yesterday, it was actually correlated. The market was down very slightly, and they were correlated yesterday. So nothing really to write home about. Back again, this is what we're looking for: is where the prices are moving up and the inventory is going down. That did not happen. Yesterday it was correlated, which means the market was acting normally, as normal as this market can act. Taking a look at the daily numbers, so here's the initial move to the upside, then it came down, and now we're just slightly above where we were prior to the news event. Intraday numbers, there's some confluence at 4,008. Again, the whole number 4,000 has got a little bit of confluence. Top side, 40.36. Maybe a little bit of confluence around 40.53. Stock Traders Almanac for today is 71.4, 71.4. So a very strong historical bias to the upside. That's a 21.4% bias above 50.50. So that's a big number for a historical number. 71.4. Hope you guys have a great day. See you tomorrow.